For TraderInsight.com, I'm Adrian Manns, and it's time for Doc's Daily Dose. I want to take a look at the around-the-horn Nasdaq Scalper Trading Service for Wednesday, August 6th, and talk a little bit about an alternate entry technique that some of you are quite ready for, judging by your emails, and others may just want to start monitoring and considering. So we had a big gap on Wednesday, and that makes it very difficult to trade in general, and it makes it exceptionally difficult to work with these scalper setups where the targets are as narrow as they are and you get blown out of the ranges that you're looking for at the opening. But in the case of PDCE, if you take a look over on the right side of the trading plan, you'll see this R2, R1, P, S1, and S2. What these are, starting with P, are the central pivot, which in this case is at $58.01, the first resistance line at $59.55, the first support line down below at $55.67, second resistance up at $61.89, and second support down at $54.13. Those numbers are significant because they are used very heavily by floor traders. They use these in their trading to interpret where there might be an inflection point in price action, and I would like to show you just how you use that to find opportunity on a normal day as well as on a day where there doesn't appear to be any opportunity. So let's take a look at the intraday chart of PDC Energy. Here it is, right off the opening bell. We have this move that pops up through the 56.95 volatility band, comes back down, hits the 56.65 band, and everything looks like it's an easy trade, but it's actually not, because the spreads first thing in the morning on a day where the Dow is gapping 50 or 60 points, not going to be very easy to trade at all. Then we get this reversal move higher, and over the course of the morning, remember, I'm very big as far as advocating only taking these in the direction of the day's bias. In other words, the bias on this one was short, and during the first hour of trading, I'm really only interested in a short side entry. So what about all this constructive price action? Does that mean I've got no opportunity? Well, remember that 58.01 pivot from the trading plan. That's a central pivot, and the way that we have demonstrated in the past for people to use this is to look for a move like this, a sharp move higher, and rest a sell short stop right underneath that pivot line. So in this case, maybe at 57.99 or even up to 58, we would put a sell short, and we did this live in the war room today, and then just put a stop loss about a nickel or so above this. What's really great is when you can find a support or resistance-based stop that's logical. So if we look back to the previous session, we see that at 58.13, there was an area that defined logical resistance for today's trading. That area also represents a violation of this pivot and would indicate then that price is going to move higher and possibly move all the way up to R1 at 59.55, and we definitely don't want to be on board for that move. But by resting a sell short stop right underneath this pivot, what will happen is, even in a market with wide spreads, we get filled on the right side of the spread. So in this case, we're going to get filled on the ask at 58 or at 57.99 or 98, but some close approximation to the actual level of that pivot line. And then if the market reverses, as it did here, we can benefit from a move down through the first volatility band all the way down to the first target from the plan. So on a day where it looked like nothing was going to happen, just waiting to see what would occur when a potential pivot inflection happened allowed us to pick up a 70-cent per share move to the downside. The rest of the morning in this was characterized by some choppy trading, and it wasn't until late in the day that the spreads tightened up enough to even consider taking another position. This one never made it quite far enough above that 57.28 line to really give us a good entry, and we would have had to have been sitting at our machine pretty much the entire day to catch this, which on a choppy day like today can really wind up spelling disaster because we get into a bunch of trades that we shouldn't be in, get taken in, get taken out. The best thing that I can say is when I see a big opening gap like we saw today, that first hour of trading gets even more of my attention than it usually does. So if you have any questions about this or anything else that we've talked about, send me an email at adrian@traderinsight.com. I hope you had a great trading day on Wednesday and you're going to have an even better one on Thursday. The best trader education anywhere, only from traderinsight.com.